Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, October 28th, 2019, and we again find ourselves in a new trading week, and also right now is the final trading hour of the day. As I mention each day, I believe that the prices that are as close as you can get them to the close of the market are the most valid prices of the day. During the day, you have the algorithms, you have the day traders battling it out. I consider it a lot of noise. In the final hour, and more specifically in the last few minutes of the market, the large financial institutions come in, move the prices around. I believe those are the most valid prices. They're the smartest, they have the best technology, they have the best information, and they take control away from the day traders and the algorithms. And those prices, in my opinion, are the most valid prices to make your buying and selling decisions from. So, we are having a good day today. The Dow is up 134 points, up 0.5%. Nasdaq is up 84 points, 1%. S&P is up 17 points, about 0.6%. So we're having some new highs, some new all-time highs today. So it's very strong in the market. It's good, right? It's good. So let me make sure everybody can hear. Hey, Christopher Uhl. Hey, buddy, what's going on? Great to see you. 10-minute stock trader. Greg, I wanted to tune in today. Oh, I'm really glad that you did, Christopher. Thank you so much. And if you guys don't know who Christopher Uhl is, his website is 10-minute stock trader. Let me make sure that's correct. Is that correct, Chris? Just want to make sure. Let me see. Yes. Let's put this over here so everybody can see. It's a great website. He has some really great podcasts on there. So, and I was actually a guest on his podcast a while back. So thank you, Christopher, so much for coming by. And if you guys haven't subscribed to Christopher on Twitter and on YouTube, you really should. So it's an honor to have you here, Chris. Thank you so much. There I go. You got it. Hey, Jackson, what's going on, my friend? Good to see you, Jackson. Jackson's our friend from Australia. So thank you for tuning in today and look forward to our lesson tonight. Really looking forward to that. So anyway, thank you everybody for coming by today. I really appreciate it. I appreciate you investing your time here. I hope you're learning something. I hope you're getting a good return on your investment by spending time here. So if you have any questions today, please let me know. Oh, there you go. Oh man, flattered, Greg. There you go. There's a handsome Chris right there. So, all right. Well, listen, the plan for today, as usual, first of all, we're going to go ahead. We're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current stock positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward, either to the upside or to the downside. After that, we're going to do a few minutes on trader psychology. As you guys know, in my opinion, being able to manage your emotions and sticking to your plan is the biggest skill that you can acquire and that you need to work on to be a profitable trader long term. You really need to get those emotions in check. When the market's going up like this, you know, it's great and you're not being tested. But when the market goes down for an extended period of time, that is when, you know, your emotions are going to start playing with you. That is when you're going to feel like you don't want to follow your plan. You want to override your plan. And in the long term, you really need to follow your plan. And so you have to get those emotions under control. And it is a skill. Think of it as a skill. When you feel like you want to break your plan, go, no, I know what's going on here. I'm going to stick with my plan and I'm not going to deviate. So we're going to do a few minutes on trader psychology. After that, we're going to go through my entire watch list. We're going to go down through each stock one by one. We're going to take a look at the support, resistance levels. We're going to look at indicators like MACD, moving averages, RSI, ATR channels. And the way that I approach trading, everybody, is that when I look at moving averages, when I look at ATR channels, when I look at MACD, RSI, I look at those as potential groups of buyers. And if you want to get into a trade and have the best chance to make money in that trade, you need to be in the company of as many groups of buyers as possible. That's why when I go through the charts, I look for confluences of potential buyers and potential indicators lining up, because I look at each indicator as a group of buyers. So if I can get a setup where I have 2, 3, maybe even 4 different indicators lining up near the same price, then I look at that as 2, 3, 4 groups of buyers coming in. And again, if you want to have a profitable trade and you want it to go up, you need to be in the company of other buyers. So that's what we're going to do. We're going to go through, we're going to run through, we'll mark off a few that look decent. And then as we get closer to the close of the market, we'll go through each one a little bit more with a fine-tooth comb, and we will see at the end of the day whether or not there's a new entry for me to take. And even if we have great setup, everything lines up, we still have to look at the risk to rewards. We still have to look at, okay, is this new position correlated to any other positions I have? So, you know, we need to get a good setup. We need a good risk to reward. We need to think about correlation. We need to think about, you know, how many positions we have, what percent of our capital are we using, are we still within the limit? So a lot of different things to think about. So and then after that, after the market closes, if anybody has any questions for me whatsoever, please let me know. If you'd like me to take a look at any stock symbols, I'd be happy to, you know, break down the technicals of that chart and give you my humble opinion. And then if there are any stocks that you think would be helpful for the group before the market closes, feel free to type them in the chat and maybe put a little asterisk or something by it so that I can know that it's time sensitive and that I can break it down before the market closes. So, all right, well, that is the plan for today. And so if you guys could just hold tight, and I'm going to run the US disclaimer, and I'll be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, man, I just realized I had my microphone off. Could you guys hear me for that first few minutes? I'm not sure whether or not the microphone on my computer has an effect on this or not, but dang it, sorry about that. Anyway, just in case, I hope you guys could hear me, but Christopher, it's Christopher Ewell. Great seeing you, and I hope you could hear me at the beginning there. And Jackson, great seeing you. Thank you for coming, sir, and I look forward to speaking with you this evening. Hey, Jesse, what's going on, bud? Good to see you, my friend. Always great to have Jesse here. Jesse just finished up with his lessons. What a great student you were, Jess. And if you have any questions whatsoever for me, Jesse, please let me know. You know, if you need a little brush up on our lessons, you just let me know, because that's part of the deal when I have lessons. Hey, Mount Doji, what's going on, my friend? Good to see you. Thank you for coming by. Steve Burns said, hey, buddy, what's going on, Steve? Thank you so much for coming by. Steve having a great day today. I know that, so congratulations, my friend. Steve says, hey, Chris Uhl, great to see you in here. It is. Oh, Chris said sounded okay to me the whole time. Okay, sweet. And Roy B, hey, how's it going? Thank you for coming by today. Really, really appreciate it. So, all right, well, let's get started. So listen, Everybody's been hearing me talk about the little issues I've been having with Trade Navigator and that they were going to get it all worked out today. Well, they did and they didn't. So I've been on the phone with them the last several times today, and I'm getting my NASDAQ quotes. I'm just not getting New York Stock Exchange quotes. And they said that it has something to do with my antivirus. So they say it's working on their end, just not my end. So I'm going to have to use the Schwab charts today on a lot of stuff. I apologize. After the market closes, they gave me something to do and they said they really think it will fix it. So I hope so. I hope so. And I'm hoping to be done with this whole issue with Trade Navigator and this new data feed, because it's been a pain. Let me tell you, it's been a pain. And when I saw this not working today, I was like, oh, you have got to be kidding me. So bear with me. My apologies. Hopefully I'll have this fixed by tomorrow and we'll never have to deal with this again. I hope. So on the Trade Navigator charts, NASDAQ stocks are working, but the New York Stock Exchange are not working. So with that said, oh, hey, Anthony, what's going on, bud? Good to see you, Anthony. Thank you so much for coming by. Hope you're doing well. Anthony's a previous student of mine. If you have any questions, you please let me know, okay, bud? Hey, John, what's going on? Good to see you, John Cortez. Mount Doji said, had a great day with LL. Okay, well, that's one of those ones I can't pull up on this chart, so give me a sec. We'll go back through and look. But Etsy is one of those ones. So, all right, so I did buy Etsy back here on the 24th of October. I bought it because we were above value. We were above the 1 ATR channel. We came back into the value. We moved sideways. We kind of held that level. Next day, we went down, triggered a V1 right here. Actually, also triggered a V1 and a V2, but technically you can't have more than one. So did buy here at 57.75. As you guys know, I do scale out on the way up, so I was able to take some profit here on Friday as it moved up. Today did not quite get to my profit target, as you can see, and it gapped up and reversed back. My initial stop on this trade is halfway of this washout bar. This is where it should hold support. If it does go down and close below this halfway here, I will have to go ahead and just lock in that small loss. Right now it's almost exactly where I bought it, but if it does close below here today, I will have to go ahead and exit. If it holds, I will go ahead and hold. When you have a big upwards bar like this, a big large range bar, from a Fibonacci standpoint, you should hold 50%. There should be some support, and so far it is holding support. So anyway, as far as Etsy goes today, if it closes back below here today, I will go ahead and get out. If it closes back below tomorrow, I will also go ahead and get out. If it starts moving up, I will just continue to phase out to the upside as I hit my profit targets. But we do have earnings coming up on Wednesday, so I am going to have to get out of this trade regardless of what happens because I never hold through earnings. All right, let's see if we can work our way through this. I'm going to have to do it with two charts. And again, guys, I really apologize. But I did buy gold back here on the 25th of October. That was Friday. I bought it because we had a 520 EMA cross. That is a valid long-term crossover trend trading approach to gold when you have the 5 EMA cross over the 20 EMA. In addition, we had MACD crossover, which was good. Didn't really like the candle action of what happened on Friday. It was a bearish candle, but this is a valid signal when the 5 crosses and closes above the 20 EMA. So let's go over here to gold. Today we are down today, unfortunately, and I am going to be keying off of the 520. Currently, right now, we are 140.92 on the 5, and we're 140.90 on the 20. So currently, as it is, I would hold this position here unless the 5 closes equal to or lower than the 20. But you know, the key with these crossovers is they don't have a high winning percentage, but if you're wrong, they hurry and get you out quickly. And if you're right, you have the potential for some real large upside. And you know, that's the key to profitable trading, is having small losses, break-even trades, small wins, large wins, right? So, you know, the real key is always to keep your loss small. So, you know, did we know this trade was going to go up or down? No, we didn't, but it was a good, legitimate back test. And then we just have to place our bet and we have to let the market tell us what's happening. And, you know, if it closes below today, okay, we get out, we take about, you know, a 1% loss and be good with it. But there are very many times where you'll take these crossovers where you'll have 2, 3, 4, 5% to the upside. And at the end of the year, you know, it's okay to have 1% losses. It's okay to have 1.5% losses, but you need those 3 and 4 and 5% losses to offset this. So anyway, we'll see what happens with gold. I'm going to have to watch this carefully at the end of the day. All right, so IWM, I did buy, this is the Russell 2000. I did buy the Russell 2000 back here on the 15th of October when we closed above the 200-day. We also had a positive MACD crossover. So, you know, my whole intention with this trade here was, okay, I'm going to buy over the 200. It was strong enough to close over the 200. If it closed, if in the coming days, if it closed even 1 penny below, I would just get out. Just getting back to what I just talked about keeping your losses small if you're wrong. You know, finding a setup, finding support, getting in as close as you can to where your support is. So if you're wrong small. But if you're right big. And you can see this has been a really nice trade for us here. We bought here 151.39. We've been phasing out, phasing out, phasing out. I did hit 2 more profit targets today. So let's take a look over here on IWM. And you can see I hit the 2 profit targets up here. So this is a discretionary trade. This is not a mechanical trade. If we reject the 70 RSI to the upside, that will be my signal to go ahead and just lock in the balance of the shares I have left. Or conversely, if we have a close below the previous day's low, that will also be my signal to go ahead. But anyway, it's been a great trade so far, and hit 2 profit targets today. All right, SLV. I did buy SLV back here on the 24th of October when we had the 520 EMA cross, similar to gold. This is a good back-tested approach to trading silver. When the 5 EMA closes over the 20 EMA, in addition to that, MACD did go positive on the same day. Very next day, I got out of 40% of the trade right here at the very top where it opened. So that was great, right? Because the nice thing about phasing is you take some profits off as the market is giving them to you. And whenever the market really wants something from me to the upside, I give it to them. So, did get 40% right there at the open, which is fantastic. Today, it is down. But the 5 is still above the 20 EMA. So that is my signal. It's a mechanical system. There's no discretion involved. As long as the 5 EMA stays above the 20 EMA, I will continue to hold. And as you guys know, I like to have a variety of trades. I like to have some discretionary trades. I like to have some mechanical trades. Sometimes you'll take a discretionary trade and it will go against you, will get you out, and then it'll turn right back around and just keep going and going and going and going. And, you know, that's just part of being a discretionary trader. Sometimes that happens. Other times it will just go down and you're really glad you got out. But I like to have a balance. I like to have some discretionary. I like to have some completely mechanical in case you get a really big long trend. And we've had a few of those. We had a trade in gold a few months back that was just a monster that was totally mechanical. So anyway, silver down to today. 5 is still above the 20 EMA, so we're still good holding silver. But I am going to have to watch gold. All right, so the all famous end of day SPY trade. So this is a this has nothing to do with technicals, indicators, anything. This is just based upon a long-term back-tested approach. This is from Liz Ann Saunders at Bespoke Invest on Twitter. I believe Liz Ann Saunders is the chief investment advisor at Charles Schwab. But this test, you have two options. Option number one is you can buy the SPY at the open each day and sell it at the close each day. If you did this every day since 1993, buy at the open, sell at the close, buy at the open, sell at the close. If you did this every day since 1993, you would have actually returned a negative 13.9% return for your troubles. However, if you did the opposite, which is what I do, I buy the SPY every day at the close, sell it first thing the next morning. So every day since 1993, buy at the close, sell at the morning, buy at the close, sell at the morning. If you would have used this approach, you'd have actually returned a positive 634.2% compared if you did the opposite, a negative 13.9%. So past performance is no guarantee of future results. Of course, that's true, and that's true for any trading approach. But you know, the interesting thing here that I always find fascinating is that this means that all of the gains in the S&P, all of them since 1993, have come from people bidding it up in the after hours and bidding it up in the pre-market and then selling it into the open. This is a great, this chart's a great illustration of what a good long-term back-tested approach looks like that has an edge. Over time, it goes up and up and up. In between, you have bumps and bruises and ups and downs. So, you know, I think what you should take away from this chart is a couple of things. One, that even the best approaches have ups and downs. And so, you know, you have to keep that in mind. Trade for the long term. You know, look at each trade as just one of the next 1,000 trades. Don't let any one trade destabilize you, right? And the other takeaway from here is that you have to position correctly. If you would have started right here and used tons and tons of capital, you would have been sorely disappointed. But, you know, if you would have just used a small amount so it didn't inflame your emotions and you were able to trade this for the long term, it really would have worked out. I hit a all-time high on Friday using this approach. I've used it since February 26th, and it's done very, very well today. And well, actually a new all-time high in this approach today as well, because, and this is the delayed chart here, but I did buy this at 301.60 on Friday, and I sold it today at 302.91. So more than $1 gap per share on the gap up. So this has worked extremely well. I really like this. But I'll tell you, in May of this year, 90% of my overnight SPY trades were losers. So, you know, that was frustrating, but looking at it in the aggregate, looking at it since February to now, you know, I hit all-time high. So it's similar to that chart that I just showed you. So if we look over here at the SPY, yep, you can see it's higher than the open, but that is where we got out. So anyway, fantastic. All right, Qs. Well, this is one chart that does work. So I did buy the Qs back here on 11th of October. I bought it when the 5 EMA crossed over the 20 EMA. This is one of those completely mechanical trades. I'm going to stay in this thing as long as the price, as long as the 5 stays above the 20 EMA, or I'm going to phase out to the upside. And the 5 has stayed above the 20, and I've been phasing out, phasing out, phasing out, phasing out, phasing out. Did hit one profit target today, and very close to hitting another profit target right now. My next profit target here is at 197.90. Currently, we're at 197.74. So this has been a fantastic trade. It's been moving up nicely. Every time we had, you know, decent moves to the upside, I sell a little bit more, sell a little bit more. lock in those profits, take some chips off the table. And, tomorrow, if it goes screaming down, then all these profit targets that I've taken up here at profitable levels, the market can't take it away from me, right? Which is nice. And that's why I like phasing out. So I'm getting, well, I didn't check my numbers. I think I'm out of about 70% of this trade. So as long as it keeps moving up, I'll continue to phase out and, or 5 crosses back below the 20. And that is it. All right. Steve says, I am enjoying all-time equity highs again today. Congratulations, Steve. That's such a huge achievement. People that don't trade don't understand how big that is. Now starting to look for the exit as things are getting overbought this week. I totally agree, but congratulations, Steve. Christopher says, I've been using the TrendSpider platform for backtesting and loving it. What do you use? I use Trade Navigator, which has been kind of a pain in my butt over the last few months, I got to be honest with you, but I've used it for 20 years. I really do like it. They just had an issue with their data feed and they seem like they're getting it worked out. So hopefully I'll have this taken care of by tomorrow. Chris says, love the 520 crossover. Didn't realize the power until I read Steve's books. That's right. It is a good crossover approach. I've been using TrendSpider and ETF replay for my backtesting. Yep. Well, if I can't get this worked out with Trade Navigator, I may have to switch over. But we'll see. We'll see by tomorrow. We'll see by tomorrow. All right. All right, so I'm going to have to switch over to these other charts here. Oh, I forgot. All right, so listen, guys, this is the time of the podcast where I like to do a little bit on trader psychology. There's a lot of good Twitter channels that, the owners of these Twitter channels, they spend a lot of time, put a lot of energy into putting out good trading words of wisdom, good sayings about trader psychology, and Lone Stock Trader is one of those people. He has a great channel on Twitter, at Lone Stock Trader on Twitter. If you haven't subscribed, you really should. He's a trader, but he also has kind of a trading philosophy where he puts out good trading words of wisdom. And so I really enjoy his channel, and you should too, and read everything he has. But he says here, the confidence required to follow your strategy just can't be taught, and neither can it be acquired through backtesting. It has to come from years of firsthand experience using it and going through its numerous ups and downs. Real confidence in your strategy has no shortcut. And guys, this is so true. You can teach trading, you can teach technicals, right? Like I do, but the confidence can't be taught. Looking at a back test, I guess it should give you some confidence more than not, right? Like on the back test of the overnight SPY trade, but until you really use a strategy, go through its ups and its downs long term, you're never really going to have the confidence it takes just by looking at a back testing report. So it has to come from years of firsthand experience using it and going through its numerous ups and downs, so that you really know deep in your heart that over time it does have an edge and it does work. I got to that point many years ago, but when I first started trading, I would use certain strategies, but I honestly couldn't tell you whether or not I really thought they worked or not. It was just after years and years and years that I realized that, in the long term, it did turn out. Think about the game blackjack. When they first came out with blackjack, they probably looked at the odds and thought, okay, this works. But when they first started playing, I'm not sure they really knew that the house had an edge. But after a while, the house is like, yeah, we have an edge. We're going to have ups and we're going to have downs. We get it, but we're confident. And that's the same thing with trading. If you use a good back-tested approach, it can't be taught. The confidence in your trading system, it can't be taught. You have to go through it. Like Lone Stock Trader says here, there's no shortcut. You just have to do it. You have to do it for the long run, and then you'll have confidence in the approach. Like, with my trading, I know approximately my winning percentage is 70%, and I know my wins to losses, my kind of my risk to rewards about 1.25. So I win about 70% in the long run, and my win to loss is 1.25. So when I win $1.25. When I lose a dollar, but I win about 70% of the time, and so that's where my edge comes through. So anyway, I hope that helps. But just to sum up, you just need repetition. You need time under your belt that will make you confident in your approach. All right. Steve says you can only develop confidence in yourself and your system with the experience of trading it successfully over time. That's exactly right. Yep. Just like Lone Stock Trader said, I mean, that's essentially it. You really not going to have that deep-seated confidence until you get the experience. And I might point out that you're not going to get the experience that you need if you position size too large. If you position size too large, you go through a bad streak, you might get blown up, you might get discouraged, you might quit, and then you never get the experience. And without the experience, you never get the confidence. So, all right. So I'm going to have to use these charts today, guys. I apologize, but what else can I do? Hopefully I'll have this worked out tomorrow. All right, so Apple, it's unbelievable. This move is just unbelievable. I mean, these rarely happen, but unfortunately, it's just too high for me to buy up here. We're at a 78 RSI, unbelievable. We have earnings on Wednesday, so I cannot get involved with this. It would scare me to go long. It would scare me to go short. Imagine if you just decided you were going to go short. Would not have worked out so well. But like I said, I'm scared to go long this stock. I'm scared to go short this stock. I need some kind of pullback into value, 5 crossing under the 20, some kind of dip in order to give me a decent risk to reward. But in case you guys have Apple, congratulations. You've had a fantastic run. But I have to wait for a pullback. You know, my trading approach requires me to have some kind of pullback and not buy at these levels. Adobe. So Adobe did not quite get down to the 30 RSI. We did have a close under the 250, close back over the 250, which is a good valid back-tested approach. I did not take that trade. It's up a little bit. For me to really get interested in Adobe, I'd either have to have a close back above the 200, or we were underneath the 1 ATR channel. We've moved into the ATR channel. Now I'd like to get a pullback of a day or two, get a higher low V1 or V2. So that is what I would be looking for, but nothing yet on Adobe. AMD just skyrocketing here, right? Just skyrocketing. But again, too high. It's up near the third ATR channel. 90% of prices when they get up to the third ATR channel tend to stall out or fail. So I can't buy up here. It's been very, very, very strong, but I need a pull back into value. I don't like to buy above value. I want to buy in value or below value. I learned that from Dr. Alexander Elder. But this is definitely above value, and it's near the third ATR channel. So some kind of pullback into the value zone, V1, V2 is what I would be looking for today. Amazon, unbelievable. You know, we had earnings. We had that huge sell-off after earnings. Now we've rallied back, and we've rallied back. So nothing on Amazon here today for me. What I'd be looking for here is a close above the 200-day moving average. That might be one option. Another option on Amazon would be the 550 SMA crossover. That is another option. Or now that we were underneath the 1 ATR channel, now we're back in value, some kind of pullback for a day or two, and then a V1 or a V2. Nothing much here on Boeing. We had that big sell-off. We have rallied back. We're not back into the value zone. RSI wise, we're 36. For me to get interested in Boeing, I'd have to have a bounce off the 30-day or the 30 RSI, or a close under and close over the 30 RSI at this point. So nothing on Boeing. Caterpillar, same as a lot of stocks, we're just overextended. We're near the third ATR channel. It's very strong, but from a risk to reward ratio, you know, I want to be patient here, wait for a pullback, wait for lower prices. And if it just keeps moving up, well, then I'll just miss out on it. And that's just how it goes. But it doesn't offer me a good risk to reward ratio at this point. The Dow doing pretty well today, up about 0.5%. Really nothing here for me. No V1, V2s here. Getting up to the 1 ATR channel, and I'm not surprised to see a little resistance here. But really nothing on the Dow. Disney. You know, what I'm looking for on Disney, what I've been waiting for a while, is I've been waiting for a bounce off the 200 or a close under the 200 and back over the 200. We did make a higher high here. We're in value zone. We're in the value zone. We're starting to move sideways. I'd really like to see a washout bar that washes out this low, washes out today's low, and a V1, V2. Alternatively, on Disney, where's my Disney? Sorry, this back and forth between two charts is annoying, I know. Is a 1050 EMA crossover, and we haven't quite got that yet either. So, you know, close under the 200, back over the 200, to bounce off the 200 would be good, or a 1050 EMA crossover, but nothing there. Etsy is kind of disappointing today, especially with the market. We're close to break even on this. We did hit one profit target on Friday. But if it does close, let me go over here to the other chart here. Oops. So if it does close under 57.36, on a closing basis today, I will go ahead and just get out of this. Call it a very small loss on this trade, but did not participate in the market today, unfortunately. Ford, you know, had some bad earnings, still way under the 200. RSI right now is a 40.77, so nothing there. Facebook is moving up here, but there's really no signal. It's quite range bound at this point, so nothing on Facebook. Five Below, you know, we were above value. We came into the value zone. We didn't have any sidewards movement. That's why I did not take this. So really nothing on Five. Gold, of course, we took that yesterday. Currently, the 5 EMA is at 140.95, and the EMA, the 20 EMA, is at 140.91. So as long as the 5 stays above the 20, I will keep this, right? But again, with these crossover systems, they don't have a high winning percentage, but what they do offer are asymmetrical risk to rewards. When you're wrong on these, you're wrong fairly quick and you get out. When you're right, you have a lot of potential upside. So Google has earnings after the bell today. I know Steve had a great trade here with the 520. I didn't, it was right here. I think I didn't take this one because I felt like it was a little too high over the 1 ATR channel. And this is one, I guess in hindsight, I should have taken, because this one has moved up like a champion. Earnings are coming out this afternoon. So if I did have this trade, I would be getting out today and just locking in a nice profit. So congratulations, Steve. Anyone else that took the 520 crossover on Google. Goldman Sachs, also another nice day. We did have the crossover, I believe, back here on, now it doesn't show me the date on this chart. Shoot, the 16th, I guess. And that one has moved up really, really nicely as well. So nothing for me on Goldman Sachs. What I'd really like to see on Goldman Sachs is a pullback into the value zone, V1, V2 entry. Intel had earnings. It is up slightly today. We're closed above the third ATR channel, which is very positive. But again, it's too high for me to buy here. I need to pull back into value like a lot of stocks. IWM, of course, we have bought it back here. It's had this great move up, 2 profit targets today. RSI 65.26, so it is getting pretty extended, but this has been a really nice trade so far. IBB looks like it is closing above the 200-day moving average. However, it's at the second ATR channel. That's just too high for me to buy for the filters that I use, because it's getting pretty close to the third ATR channel. And again, 90% of prices do tend to stall or go down once it gets to that level. Sometimes it doesn't happen. I mean, look at Apple, right? Apple is just motoring on up, but that's an exception. It's not the norm. You know, when I play the odds, you know, we're always playing the odds here. And if something happens four out of 5 times, then I want to get out if 4 out of 5 times it gets rejected up there. And then sometimes it just goes up, but what do you do, right? Johnson & Johnson, really not much here under the 200, nothing even really close. Coca-Cola having a down day today. We have this confluence of the negative 1 ATR channel and the 100-day moving average, but really nothing there on Coca-Cola. So kind of these safety stocks have been having some issues. Lockheed Martin, nothing really on Lockheed Martin. Currently we're at a 37.61. I'm looking for a dip to the 30 RSI on Lockheed Martin. MasterCard, another strong day today. I don't like this V formation here. People that bought here are going to be looking at, once the stock starts to stall out a little bit, start going down, I believe you're going to have a lot of selling. But we went under the 1 ATR channel. Now we've rallied back into the channel. So I'm looking for a day or two to the downside and then looking for a V1 or V2. So that's the plan on MasterCard. Altria Group, just really big, strong day. You can see right when you get up to that third ATR channel, you tend to kind of stall out. And that's pretty much where it did stall out. Nothing on Philip Morris. I need a return back into value and look for a V1 or a V2. Merck did bounce off the 200-day moving average today. It was much lower earlier. We're at a 43.57 RSI. A lot of volume today. You know, it has been respecting this 200-day pretty well. Here, 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 and here. So, you know, it's somewhat interesting, but well, I'll do the numbers here just in case for at the end of the day. All right. So I'm going to mark Merck there. All right, Microsoft had a big day because they got that contract with the Pentagon, $10 billion one. Really nice big gap up. Currently, the price now is below the open, which is a little bit of a bearish reversal candle, but nothing I can do here. It's just too high, right? It's right under the 2 ATR channel. Again, got to wait till it gets back into value. You know, it's important, guys, that we don't chase stocks way up here. I know everything looks good, market's going up, you know, the sentiment's really strong, but again, in my particular way of trading is I want to be patient. I want to wait for some kind of pullback into value. All right, so Netflix, the 520 EMA cross on Netflix does have a good back test. Currently, though, the 5 is at 277.37 and the 20 is at 277.46. So currently that is not a valid back test. So I will mark that. And we'll see how that ends up at the end of the day. Nike, just kind of been on that down move there, hasn't it? Currently we're at a 43.84. You know, I'd like to look for a convergence of a 30 RSI at the same time we have a confluence with the 100-day moving average. So probably down in this range. But again, I'm just going to sit on my hands until we get there. Doesn't mean we want to get involved right this second. Philip Morris is above the 200-day moving average. It's just too high in the channel. We're right up there near the second ATR channel, so nothing there. PayPal had really great earnings. Looks like it's holding the 200-day moving average, but again, it's just too high for me to buy up here. Q's very, very strong. Are we getting close to that second profit target? Man, I think we missed it by we missed it by 7 cents. We did hit the one, but we didn't hit the second. SPY, of course, we had that nice overnight SPY trade. I will be buying the SPY again at the end of the day, like every day. Silver is one we're gonna, oh no, we have to watch the gold. So we did take the silver with the 520 EMA crossover, did hit some really nice profit targets on Friday. 40% of the trade is down today, but the 5 is still above the 20. Bonds, of course, bond prices have been selling off, which increases the yield. Right now we're at a 34.48 RSI. You know, this is getting kind of close down to these areas where, you know, 90% of prices fail at the third ATR. 90% of prices tend to find support at the negative third ATR. And if we could get a confluence of the negative third ATR at the same time we have like a 30 RSI, that would be fantastic. So, you know, maybe give it another day or two and I might be able to enter a position in bonds, but nothing quite yet on bonds today. Tesla, of course, had fantastic earnings, just went up and up. Today we have a reversal bar. So this might give a little solitude to the shorts. Looks like we're working on a V1 to the downside here, but really nothing I can do with Tesla. Don't want to short it up here, don't want to buy it up here. Twitter down again today. Boy, they missed their earnings and have not participated in this rally whatsoever. Currently, we're at a 1842 RSI, one of the lowest RSIs I've seen in a long time. UNH looks like it's going to close above the 200-day moving average, but it's right up here. 1 3/4 ATR is just too high for me. Again, need a pullback into value. All right, oil. Well, we did have this nice move up. We did close above the 1 ATR channel. We are now back into the channel. This is exactly what I'm looking for. I'm looking for it to come back down deeper into the channel, move sideways, find that it has some support, then look for a V1, V2 to get me entered back long. Here's the dollar. We went under the 1 ATR channel, back in the channel. When that happens, I want to wait for a 1 or 2 day down move and then a higher low V1, V2. So I will be looking at that, but nothing there today. VIX is coming to life a little bit today. We have a V1 at the second ATR channel. I imagine some people are probably hedging themselves a little bit as far as with big earnings with Google and so forth. So it is a V1. It's not low enough for me to buy here. It's a 33.92 RSI. What I'm really looking for on VIX is an under the 30 and then back over the 30. Verizon. We were above the 1 ATR channel. We have come back into value. It looks like we're stabilizing. So if I could get a V1 or V2 in this week, I would possibly take a look at that. Walmart. Well. Above value, into value, sideways movement. We had the washout today. Looks like we're going to be triggering a V2 to the upside. And if you guys remember, I did short Walmart up here. So that was a good short trade. I did exit Walmart on Friday because we bounced off the 50 RSI. So this looks pretty good, actually. Walmart does look pretty good to me. How we doing on time? All right. Yeah, we're above value, back into value. Couple days sideways movement. Friday we stabbed down, reversed back up. Today we gapped a little bit, closed the gap. Let's see, the close there is 119.10. So if we can close above 119.10 today, I will be taking a long position in Walmart. All right, XLE, we've moved up, closed above the 1 ATR channel. I need to pull back in, nothing there. XLF, very, very strong. Need to pull back into value before I can get interested. Real estate having another down day today. Looks like we might close under the 1 ATR channel. If we do close under the 1 ATR channel, I want to see a rally back in with a couple days down and then a higher low V1, V2. XLU, utility sector has sold off pretty strong. So nothing on that. Healthcare having a strong day, way too high for me to buy up there. And XPH. All right, you guys give me give me about 20 seconds. I got to move the dog around. I apologize. She can tell time, I swear. Okay, sorry about that. Okie doke. So what does that leave us with today then? Oh. Man, sorry guys, I'm a little discombobulated today because all this problems with the chart and being on the phone with Trade Navigator and the timing and everything. So anyway, we'll make it through. We'll make it through. All right, so Merck, Netflix, and Walmart. So Netflix doesn't have the cross 228.28. I'm sorry. 277.28, 277.42. So no, it does not yet have the crossover. And then Merck. Yeah, I tell you what, I like Walmart the best. All in all, I like Walmart the best. As long as it closes above 119.10, and it is there. But you see, we were above the value zone. We came back into the value zone. We moved sideways for a couple days. We had a stab down. Now we're triggering a V2. Here's day 1, day 2, day 3, day 2. Washes out day 1. Looks like day 3 here is going to close above day 1's close. So as long as Walmart closes above 119.10, I will go ahead and take a position in that. Etsy is another one I have to look at. Currently, it is underneath my stop loss, unfortunately. So if this closes under here, I'm going to have to sell it. Gold currently, the 5 is 140.95. And the EMA of the 20 is 140.91, so that looks okay. Qs did not quite hit that second profit target. And Netflix does not look like it's going to. All right. Hey, everybody. Sorry, I don't have time to go through right away, but I see everybody being he and Johnny and Marco. Andrea, oh, hello. Oh, I'm glad you did find us. Steve Burns, great job. 4.13% before earnings. Johnny, good to see you. Hey, Kurt, what's going on, bud? Hey, Greg, back. Been away, but glad to be back. And glad that Steve and Christopher Uhl are here. Have some heavy hitters in the room. That's right. That's right. Hey, Murat, how you doing, bud? Good to see you. Oh, yeah. Thanks, Jackson. This back and forth between it's tough. It's tough. But anyway, we're going to get through it. So Etsy 57.36 is the key line there. Currently, it is under. Gold does look okay. 140.95 to 140.91, so that is fine. And then Walmart does look pretty good. So I've got 6 minutes. All right. So I'm going to have too much to do at the last second, so I am going to go ahead and buy my Walmart position right now, because this does look pretty strong that it's going to hold above 110. So I'm going to go ahead and buy that. Okay. $119.31. Okay. And Etsy 57.36. So Etsy looks like we may have to get out of Etsy. And then of course I'll be buying the SPY at the end of the day as well. Okie dokie. So that looks like about it for me today, guys, is just the Walmart trade. So a little disappointing on the gold and the silver trade, but the IWM, the Qs were up good. The overnight SPY trade was up good. And most disappointing today is Etsy, with the market being up like this. So Walmart looks fine, looks good. $57.36. Well, it's going to be real close. Looks like it's going to be under. All right, I think I'm going to have to just go ahead and sell it. All right, it did close under. All right, and then the SPY we got at 303.30. All right, so Etsy is out of there. The small loss, unfortunately. And then SPY, the new SPY trade is 303.30 for tomorrow. All right, so a little up today, a little down today. But you know, like I said, with these charts, there's a lot of things that are getting overextended here, and it's important that you don't get caught up in the jubilance of the market going up and making new highs. You know, if your trading approach calls for waiting for something to be in value or at some decent level, then just wait. I guarantee you it will come back down. It will come back down. You can look at these charts over and over and over again, and you'll see that the place that you want to think about buying is closer to the third ATR, negative third ATR channel, down in that range. And you'll see when you start getting up here to the third ATR channel, everything looks good, feels good, but that's generally probably when most of it, everything has been bought, and very likely it's going to go sideways or down like here. So, all right. So listen, before I get to questions and answers, I just want to put in a quick plug, let everybody know that I do offer private one-on-one coaching and teaching lessons and mentoring lessons in the evening time via Skype. I like to teach. I really do love it. I've had really good success with my clients. You know, what I do here on the live stream, I really hope is helpful. I teach you everything I know here, but the difference between this and having the one-on-one lessons is that it's interactive, right? I ask you questions, you ask me questions, and I ask a lot of questions. I teach during the first part of the session, then I have you teach it back to me, and it's pretty intense, right? And I do offer a course. It's 10 hours, 5 2-hour sessions. And you know, if you're interested, reach out to me. We can just kind of have an initial talk. We can kind of both interview each other, see if we're the right fit for each other, but it's totally free. It's on Skype. And if you'd like to set something up like that, you know, my email is in the description of this video, or you can reach out to me on Skype. So, you know, if you're thinking about it, I really do think it's worth the investment. I think you're going to come away with a much deeper understanding of everything trading. And I will do my best to teach you everything I know. And you know, during that Skype call, I like to do, you know, I'd like to find out more about you, you know, how you got into trading, what your challenge has been, what your goals are, and then I'll put together a lesson plan that will hopefully encompass all of what you told me and help you achieve your goals in the long run. So if you're interested, just reach out to me and we'll schedule that Skype call. And then lastly, if you like this podcast, you know, if you find it helpful, if you haven't subscribed, please subscribe. But I really would appreciate it if you would hit the thumbs up button. It does help promote the channel and get it out to more people. And there are a lot of people out there that need help with trading. I can guarantee you that. And, you know, that's why I started the channel, is to help them. So you can help me help them by just hitting the thumbs up button. And that really will help. And if you want to go above and beyond, you know, share it on social media, something like that. That would be cool too. So, all right, done with that. And let's see what everybody has to say. Sorry, guys. This has been like juggling 9 balls in the air with having to go back and forth with these charts. All right, so let's take a look. Mount Doji wanted to look at LL. Hey, very, very nice. Fantastic, up 3.86%. I believe you bought it Friday on this really nice V2 right here, right? We made a lower high here. We washed out this previous low, which we want to wait for. Then here's day 1, day 2, day 3. Day 2 washed out day 1. Friday closed above day 1's close. That was the entry. And Mount Doji had a monster. Congratulations, my friend. But yeah, this is a perfect example of a V2 right here. Jackson says, hey, Greg, we had a high or low V2 on Friday, yeah? On which symbol, Jackson? Hey, Bing He, how you doing? Good to see you. That's our friend from Singapore. I hope you're doing, Bing He. What's going on with your trading? Johnny says, hi, Greg and all. Hi, Johnny. Always great to have you here. Any trading stories for us today? Johnny has some monster trades. Marco, hey, bud. How you doing? Good to see you, my friend. Hope everything's going well in Europe. And always nice to have you here. Andrea says, hi, Greg. Just found you a few days ago. Thank you, Andrea. Really, really nice to have you here, and I hope you come back. And let's see here. And Steve had that awesome trade on Google, up 4.13%. Congratulations. But see how Steve gets out before earnings? It could go up. And if it goes up, Steve won't be, dang, I should have held. I can guarantee you that, right? Because that's his process. That's his filter. He doesn't hold through earnings. And it's a good policy. Johnny says, welcome, Andrea. Greg's the best. Oh, thank you, Johnny. Appreciate it. Andrea says, thanks, Johnny. I am listening to the Larry Hite book now as a result of the Greg recommendation. Isn't that a great book? Andrea, is it Andrea or Andrea? I think it's Andrea. So apologize if I mispronounced that. But isn't that a fantastic book? Larry Hite's book, The Rule, and kind of to sum it up, he talks about asymmetrical leverage or asymmetrical trades where you have very small downside risk if you're wrong, and you let it run, give it some upside if you're correct. And that's what we do here, right? That's why we key off of the 200, we key off of the 30 RSI, we key off of the moving average crossovers, because if we're wrong, like moving average crossovers, when you're wrong, generally you're wrong small, but you have the potential for large outsized gains to the upside, and that's why moving average crossovers work over time. Johnny says, I got out of ABBV for now with the 21% gain and a couple dividends to boot. Johnny also always has these awesome trades. Congratulations, my friend. Proud of you. And Kurt, hey, buddy. Oh, I read this one before. Been away. Glad to be back. Hey, Steve Burns and Christopher Uhl are here. You have some heavy hitters in the room, plus us, Gossett grads. That's right. Any trades so far, Kurt? I want to keep in touch with you and see what's going on with your trading. Murat says, hi all. We now have winter time in Europe, so last hour is my 8 p.m. is a bit difficult to catch. Oh, dang it. Well, I hope you can come as much as possible, Murat. I always enjoy having you here, and you always have such great contributions. Jesse says TSN up 5.1% from entry. So Jesse bought back here. I believe it was here. We went under 30, back over 30, or maybe it was here. Now I can't remember. These charts are a little different for me. Let's see. I think it was this day when it went under 30, over 30, had this V1. Also had a double bottom with a bullish divergence here, if you notice that. Fantastic. What are we at right now? We're at a 49.59 RSI. Did you keep the position, Jesse? Just me personally, I mean, not recommendation or anything, but me personally, I probably would have gotten out today with the rejection of the 50. See how we went above 50 at one point during the day, and it looks like we closed below 50. Murat says, I shorted platinum today. It was intraday trade and closed at 2 hours since it hit my target. Fantastic. Oh, Cisco. No, Jackson, we didn't have a V2 here because here's day one, Here is day two. Day two washes out day one. In order for us to have a V2, we need day three to close above day one. So here's day one, day two, day three. Day two did wash out day one. That is correct. But day three did not close above day one's close. So this is not a valid higher low V1, V2. If Friday would have closed above Wednesday's close, then yes, it would have been a higher low V2. We went under the value zone, back into value zone. We had a couple days sell off. That's what we're looking for. Then we're looking for a V1, V2, but it did not. Do you understand how Friday's close did not close above Wednesday's close? Andrea, okay. Hope that makes sense, Jackson. Bing He said, didn't find any trades for quite a few days. And that's fine, Bing He. If you can't find any trades, don't take any trades. Don't try to put something together just because you feel like you have to be taking trades. Just be patient. Don't take a trade unless you get a valid trade. You know, it's really good advice, everybody. It seems really simple, but, you know, people that trade for a living, trade all the time, they feel like they have to take a trade every day. And you really don't. If there's nothing to do, just sit on your hands and enjoy not having a position. Andrea. Hope that's correct. You love the book so far. Oh, I'm glad to hear that. Jesse said under 30, over 30. That's right. That's right. Remember now, though, what we talked about, right? Under 30, over 30, gotcha. But our profit target's the 50 RSI, and looks like today we went above the 50 and then closed below the 50. So, you know, if I were trading that, that's where I would have gotten out today. Kurt says, no trades, been away, so I didn't want to trade, but we'll start looking this week. Okay, good. And be patient, Kurt. Make sure to be patient. Everything's up kind of at these high nosebleed levels. And, you know, as you saw me go through the charts today, you know, it's like a broken record. Need to wait for it to pull back to value, pull back to value, pull back to value. Jesse said, shaved off most of my positions today. Few shares left. Oh, so you are phasing. Good for you, sir. Jackson says, perfect sense. My eye skipped that first bar. Can't believe I didn't notice. Yeah, you know, when you first start with this, it takes a minute. You know, it takes a minute to train your eye to see it. But after a while, Jackson, you'll look at it, be able to look at it so quickly. I promise you. I promise you will. Oh, goodness. Google is down 4%, everybody. Nice. Move out, Steve. See, that's why Steve got out before earnings. Fantastic. And for you guys that have Google, I'm sorry. Don't like to see anything go down for anybody. But that is, you know, it is a good example, everybody, of why you should get out before earnings and not gamble on earnings. Again, sorry guys today for this problem with the charts. I really hope I have this fixed by tomorrow. As soon as I get off of the live stream here, I've got a call. I'm gonna have to shut my computer down and do all this kind of stuff, and hopefully it's gonna work. But man, I'll tell you what, this is difficult when you're not really getting the charts what you're used to looking at, and you're having to switch back and forth and all this kind of stuff. So Amazon's down after hours. Yeah, VIX is up a bit. Right. Yeah, Andrea, I'm really glad you're reading that book. I mean, it's such an important concept, regardless of how you trade, having that asymmetrical leverage or having that asymmetrical risk, right? If you're right, you can be right big. If you're wrong small. And the reason that most people lose money in trading, the majority of people lose money in trading, is that they position size too big, they make too large of a bet, and when it goes against them, their ego doesn't let them be wrong. They want to go, no, I'm right. The market is wrong. I'm going to just hold on to this. And, imagine if you would have done that with Apple, right? Imagine if you were really bearish on Apple here. Then it keeps going up. You're like, well, it can't go up anymore, right? This is exactly the opposite. If you were short, you're letting your loser run, right? You want to let your winners run. And if you have a loser, you want to cut that real short. And the key is, okay, what's your line in the sand? What's your, guidepost of whether you're right or you're wrong? I mean, just, to give you guys an example, like on IWM, this is a perfect example of my IWM trade. I got in here back on the 15th. We closed above the 200-day. If it closed 1 penny the next day under the 200, I'm getting out, giving myself a very small loss. But if I'm right, how many times to the upside did I get for being right on this trade and letting my profit run? So really glad that you're reading that. And, if you have any questions whatsoever, Andrea, just please let me know. And I'm really glad that you're here. It's nice that you came to visit the group, and I hope you come back. So, all right. Well, I'm going to start saying goodbye to everybody. If you have any other questions, let me know. Otherwise, I'm going to get on the phone with Trade Navigator and hopefully get this worked out tomorrow. You'll be able to hear it in my voice tomorrow if I have this worked out, because this is something I've been battling for the last couple months. So, Andrea, thank you very much. It's a pleasure to have you here. If you have any questions, please let me know. Jackson, looking forward to our call tonight, and I'm really excited about it. It's been a few days, so a little more than that. So I'm excited about that. We're going to be talking about higher low V1s, return to values. So it's going to be hot V1, V2 talk tonight. Jesse, nice seeing you here. Congratulations on that trade, my friend. Excellent work. And let me know what goes on with that with your trade there. And Kurt, be patient. Don't get into something just because you feel like you have to get in. Be patient. Let's wait, right? Bing He, same with you. Be patient. Wait for something. The market always goes up and down. So, let's be patient and not chase at these high levels. Murat, I hope you can still come with the time change and all that there. I totally understand if you can't, but hopefully you can, because you always have great input. Johnny, 21% on ABBV. Fantastic, my friend. Johnny's like an ace, man. He is, and he has the best trading stories too. Steve Burns, congratulations on that Google trade. Glad that you got out before earnings. You'd have given it all back if you had not, and that is why Steve's a master, because he gets out when he's supposed to. Mount Doji, good to see you. Congratulations on your trade. Marco, hope you're doing well, my friend, and if there's ever anything I can help you with, you please let me know, okay? I really appreciate you coming every day. And Christopher Uhl, man, I feel honored today. I have Steve Burns and Christopher Uhl in here. Two heavy hitters, that's for sure. And again, you guys, Christopher, website, 10minutestocktrader.com. He has great information. He also has really good podcasts. And then Steve, newtraderu.com. He has some great courses. He has wonderful free articles here on stock trading. He has a weekly newsletter where he breaks down the market 3 times a week. I subscribe to that personally. I never miss it. I watch it every 3 times a week, and I really look forward to it. Great one last night, Steve, by the way. So that's at newtraderu.com. And so thanks, Chris. Thanks, Steve. And John Cortez, thank you, sir, for coming by. If you ever have any questions, you let me know. Anthony, good to see you, my friend. Please keep me up to date on what's going on. Anthony's one of my previous clients, so I'd like to know how things are going for you, if there's any help I can give you, and I'd like to know what your trades are too. Roy B, thank you for coming, sir, and I think that is it. It is. So yes, hopefully I'll have that fixed tonight, Jackson, for our class. So all right, I'm going to get out of here. No, I take that back. I'm going to shut down my computer, do all the steps they told me, see if I can get this thing uploaded, and hopefully tomorrow I'll have this done. So I just have this out of the way. It's really like every night I'm like, is it going to work the next morning? Is it not? Ugh, right? Even if I wasn't doing the podcast, it would be frustrating, but doing the podcast makes it a little extra. So anyway, thank you all for coming. Go out and do something nice for somebody today. Really, just hold the door open, give them a wave, give them a smile, just something. The world needs more of that, and and it can start with us, just one small little thing, and it's going to make their day, and it's going to help you as well. So stay safe out there. Don't chase high prices. Wait for them to come back into value. Wait for the prices to get back to where your plan tells you that it's a good price. Don't gamble on earnings, and always wash your hands. How about that? So, all right. Thank you so much for coming, everybody. Hope you have a nice rest of your day, and hopefully see you tomorrow during the last hour of the market. Take care. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.